All right.
Can they hear us? We started?
Yep.
Okay.
All right. We are here with to go through the Lewis and Clark County Audit Exit Conference with our auditors and financial staff. I guess we should just start with introductions.
I'm Candace Payne, Lewis and Clark County Commissioner.
Carrie Freeland, Lewis and Clark County Property Tax Supervisor.
Roger Vault, Chief Administrative Officer for the county. Andy Hunthausen, Commissioner.
Amy Reeves, Treasurer, Clerk, Recorder.
Jessica Seavey, Interim Accounting Manager.
Frank Cornwell, County CFO.
Tom Rolfe, County Commissioner.
Well,
Pardon me.
Brandy.
Hi, I'm Brandy Grandy, Administrative Assistant. And can we start? We have folks online. I think Jamie and Jill, can you introduce yourselves?
I'm going to give it a shot. Can you hear me?
Yes.
Okay. So I can't hear you great. So if I miss something, someone just flag me down. So I'm Jamie Fay. I'm an audit partner here with Eide Bailey, here to talk about the audit.
And I'm Jill Morosco. I'm an insurance manager with Eide Bailey as well.
All right. We have one from the public.
Jen Garber.
Hi, Jen Garber. I was the previous county manager during the period being audited. So I'm just joining today for any questions if needed.
All right. Let's turn it over to who wants. Frank, go ahead.
Good morning, Commissioners and everyone here. Again, my name is Frank Cornwell, County CFO. I was just going to go over, we have as part of the Commissioner's packet, you had a transmittal letter that was added, and I was just going to go over, it does a really good job of describing what our annual comprehensive financial statement is. Just going to do some highlights for you there. Just as a reminder, this is required by state law to complete one of these annual reports and to be audited annually as well, in accordance with GAAP or generally accounting principles. Also, as a reminder that this annual report is management's responsibility, and we also are required to establish internal controls that are designed to protect the government's assets. So this good. I know everybody has it in front of them, just as a reminder. So the other thing that's part of this audit is there's a single audit as well, which is referring to our federal partners, our grantors. So that shows that we're spending those monies in accordance with federal law, accordance with those grants as well. So when we get those grants, we're required to get a single audit. Just kind of going into the economic conditions is, we have annual budgets, and we do financial projections for revenues. Just another reminder there is that we see steady growth with the county, and with our property tax revenue increases around 2% annually. And you'll see more of that when that comes out with the budget season coming up. And we also require our departments to create CIPs to plan for future expenses for our long-term planning for the county as well. Those are all reflected within the annual report. Also, point out that the departments are required to aggressively pursue opportunities for grant funding from federal and state committees. It reduces local taxpayer reliance when it comes to all of our local public services. The county And this is a nice thing, and I think we're gonna go for this again this year, is that we always try to get our certificate of achievement from GFOA. We have to kind of look around the room. Annually, we've had one of these going back 29 years. If we get this next one, will be a nice 30-year anniversary for receiving this certificate of achievement. Just a brief overview on how the ACPR is created, or I'm going to call it the ACPR. It's the Annual Comprehensive Financial Report, or ACPR. This report is prepared in coordination with the county accounting department, with Bailey, our preparers and auditors. Once the fiscal year ends, the accounting department closes the books, provide trial balances, supporting schedules, and underlying documentations to Bailey, and then they take that information and they compile it for the ACPR and perform an audit. Throughout this process, there's a lot of back and forth with staff that, there's questions as to what are they providing, and maybe some clarifications. But so there's a lot of back and forth during the time of the audit prep, or the annual report prep and the audit. And we have Jessica and Jen's on if you guys have any questions when it comes to those kind of things specifically. And I'd like to turn it over, unless Roger has something to say, over to the auditors. Just as a reminder, we received a unmodified opinion. So that's a really good result. We remain in strong financial position from fiscal year 25. This is a fiscal year 25 audit. And we did receive a few findings, and the findings are procedurally related, they don't have anything to do with our overall financial integrity of the county. It's just a process. We have some corrective action plan, and we plan on correcting these findings. With that, unless Roger has anything to add.
Mr. Chair, if I could, I just might add this. So I brought it the last couple of years, documents, and if I'm not mistaken, we usually try to get a hard copy of these to all of the county commissioners so that you will get this. Finance has it, and of course, administration has it as well too. And we have electronic versions, but just as a reminder, this is what it looks like. Here's the last couple of years of what are called ACFRs that we've had. So that's it. Thank you.
And we just sent them off to print today.
Yes, Sarah's actually printing them today. So she's getting them all together in the office. So yeah.
New cover photo and everything. Yeah, so we can turn it over to Jill and Jamie unless there's anything else from anybody else. All right.
Okay. Well, thanks. That you pretty much covered my presentation. So at this point, any questions? And no, I'm just kidding. That was very thorough, so I appreciate it. Okay, do you have a screen if I share screen, or do you want to use your printed copies in front of you?
You can share a screen, and we can also try to follow with our printed copies.
Okay, I need someone to give me that access if someone is on the computer.
Do you have it now?
Looks like it's coming up. There we go. You should be able to see the presentation, correct?
Yes.
Okay, excellent. All right, so we're going to run through just a little bit of information, the full ACFR. I know you've got a hard copy in front of you from one of them, but the full ACFR is about 229 pages. So we're not going to talk through the whole thing. We're just going to kind of talk some high level details here. And then if you have discussion you'd like to have, like I said, I can't hear everybody exactly great, so flag me down if I miss anybody, but feel free to stop me at any point if there's something you'd like to talk about. So really, when it comes to the audit, you're hiring Eide Bailly to come in and give an opinion on if the financial statements are materially accurate or not. So there's a couple things when it comes to audit that I like to talk about and clarify. So we are doing a financial statement audit, and what that means is we are not recalculating everything to the penny. We are not looking at every single transaction. We are not digging into every little thing. And I'd like to say that because I think a lot of times people hear audit and they think, oh, every single thing's been looked at and we're good. We are designing tests to make sure that we have a reasonable assurance about whether the financial statements are materially accurate or not. That doesn't mean absolute. Materiality means that, hey, if we do find something that's off by a little bit, we have a threshold on things that we can pass on, and we have a threshold of things that we can't pass on. So that really is kind of what you hire us to come in and do. We then provide you some materials, some letters and required materials. And then we also assist the county in really putting that ACFR together into the format that you see it. So we give you that opinion. And when it comes to findings and results, that's the first thing you want to know. What is our audit opinion? So as was indicated, you received a unmodified opinion, which is dubbed a clean opinion, and that's what you want. This is on the financial statements, so think kind of the general operations of the county. So that it means that the financial statements as presented are in accordance with the government accounting, generally accepted accounting principles, follow GASB, and they're materially accurate. That is what you want. That's what you've received. And again, that's dubbed kind of a clean opinion. So with that, we also do an audit of federal funds. So anytime a government spends more than $750,000 of federal money, that number is going up to $1 million, but for this period, it's 750,000. Then there is a separate, more compliance-based audit, a lot of times called a single audit or a uniform guidance audit. And in this case, the district spent about $8.3 million in federal dollars, in federal funds. So those awards were tested. There are a number of requirements along with that audit that happen. They are very highly scrutinized. And really, that directive comes down from the federal government saying you must test X, Y, and Z. It is things like compliance, and they tell us what areas we're going to look at, and then also controls over compliance. So, an example of a compliance requirement would be you must spend this money on housing. Okay, so did you spend it in accordance with the compliance requirement? Yes or no? The control side of that testing is even if you spent it in compliance with that requirement, did you have someone reviewing to make sure that you were spending it in accordance with that requirement? So we test controls and we test compliance. Along with the federal dollars, we don't look at every program. There is a risk assessment step that goes that we go through. Again, that's determined by audit guidance and the federal government. So this year we tested the coronavirus state and local fiscal recovery funds. Those are COVID-19 funding. The district received unmodified opinion in relation to that as well. So that's good. So you get a opinion over the financial statements and then an opinion over this federal piece. Along with a clean opinion, you can have findings. So there can be things that come up that we say, yep, the financial statements are materially accurate. And there are some things we need to tell people about as we've audited that we learned about, because we are an independent source of information from the county. So we take what you give us, and then as independent auditors, we audit that and say, okay, yep, is this in accordance with the standards? And if there are things that we find, such as a journal entry that's needed, then we need to analyze it and say, okay, is this rise to the level of something we need to report a finding on, or is it something that we don't? So along with that, for the financial statement audit, there were two findings that came up. They are dubbed material weaknesses. So they are preparation of financial statements, including that schedule of expenditures of federal awards and material journal entries. And I will explain those a little bit. First and foremost, I would like to say that I audit exclusively governments, and these findings are in a majority of the governments that I audit. The first one is preparation of the financial statements. The GASB standards are getting more and more complex every year. Every new one that comes out has more requirements, and you still have to do the old ones. So it's getting more and more common that we come into audit and we say, oh, there's something here that we need to adjust for, or there's something we need to assist with in getting these financial statements to be materially accurate. And then along with that, material journal entries, we're seeing that a lot too, because it really just goes hand in hand and saying, hey, we've got a balance we need to adjust here in order to get it materially accurate. Then that goes hand in hand with preparing those financial statements. So really for the county, the big thing that came up this year was there was a new standard that was implemented called GASB 101. It related to compensated absences. So think vacation payable. That new standard really changed the way that dollar amount is calculated. And through our process and working through the information, there were some changes that needed to happen in terms of how that was calculated to get it to be materially accurate. And really through that, there was some considerations that came up that said, hey, these are rising to a level of if we did not get these corrected, these financial statements could be materially misstated. Got them corrected. So that's where these findings come into play. You will see if you look in the final governance letter that you'll get, there is a listing of the journal entries and the details of those, but I didn't include those just for the sake of conversation purposes. I'm going to pause here. Anything the county wants to chat about on the financial statement findings? Okay, excellent. So then the second piece is those federal awards. So again, that single audit or uniform guidance audit also can have an unmodified opinion with findings associated with it. So this one we dubbed a significant deficiency. So the difference between material weakness and significant deficiency is, remember I talked about that materiality number and saying these financial statements are materially accurate. That's really our threshold. So if we've got journal entries or misstatements that we note that are above that materiality number, that's where we get into material weakness. If we didn't get this corrected, could it be a material misstatement? Yes or no? This finding for federal awards wasn't dubbed by us as being anything that would be material to the program. So we dubbed it a significant deficiency. There was some information on a report that was filed that didn't tie out to when we were testing backup. We test certain line items on reports. That's all given to us as guidance saying you must test X to Y. And there were some numbers that just didn't tie out to what the backup said. This was corrected in a later period, and it was just a reporting item. So hey, the county has to do periodic reports on these federal funds. You need to submit those reports. The information was trued up later in a later report, but it was misstated when the initial report was done. So it wasn't anything that came out and said they spent it wrong or anything like that. It was simply just a misstatement of a number on a report that got submitted. So we have had conversations with the county about this and details, but that is the other finding that came up. Anything you want me to pause so you can chat about on this one? All right. Hearing none, we will move on. So GASB 101, I talked about it a little bit. That is the new standard that was implemented this year. This one had to do with what's called compensated absences. I'm not going to get into the nuances and the details, but really what I want you to know is it changed the way that the county accounts for things like vacation payable, sick payable, those types of things. It added what needs to be factored in there. In the past, things like sick time, if they were not going to be paid out at termination, they really weren't factored. This standard really clarified and said if people are going to use these leaves, you need to have some analysis over what is the likelihood that they're going to use this leave and then include those numbers in the calculation at the end of the year. For the county, the difference in the way it used to be calculated compared to how it is calculated under the new standard was not material. So you can see the number at the bottom of about $462,000. That is the difference in how it was calculated compared to how it is now under the new standard for the beginning of year number. That is not a material number for the government-wide financial statements. So the county said, you know what, we're not going to restate it. We're going to do it as what's called a past adjustment. So we just say, hey, we didn't restate this. It's a number over something we can just pass on. But if you go into the governance letter, you will see this deemed, it's called an uncorrected misstatement, which is in there. That's simply saying, hey, this is different than what it would be if you recalculated it. It is not material. And I want to stress that this is not a material number. This is very common in governments where we say, hey, we've got something that's different, but for XYZ reason, we are not going to go back and restate it. We're not going to change it. That's again, very, very common. It's not changing kind of the day-to-day budget way you're doing things. This is just on the government-wide statements, how this standard is calculating this vacation and sick leave payable. Questions on that? Okay, excellent. All right, now we'll talk a little bit about the operations of the county. So again, we're talking about 2025. So this is the year ended June 30, 2025. We're going to talk about the general fund. So this is a lot of numbers. Really, this is the budget to actual. So what was the final budget compared to what really happened? And then what was the variance with that final budget? So revenues came in at about 16.7 million. That was about 267,000 over budget. And then expenditures were about 14.5 million, which is about $2.8 million under budget, which in both cases is conservative budgeting. Most of my governments across the country do this, where you're a little bit conservative and you estimate that you're going to get a little bit more or a little bit less in revenues. You estimate that you're going to expend a little bit more in dollars out, which is what I see a lot of times, like I said. And then at the end of the day, the net change in fund balance is a deficit of about $308,000 deficit spend. That has to do with his other financing sources and uses piece, which is a different bucket than these revenues and expenditures. So really that comes down to this fund balance at the end of the year of about $9.6 million. That's really at the end of the day, what's left in the general fund. Now, when it comes to that general fund number that's left, that's called fund balance. And the reason that that fund balance is important is because of a few factors. So first, it contributes to a favorable bond rating. So if you're going to go out for debt, that gets you a better interest rate. Two, it produces some investment income because you've got some dollars sitting that can be invested or set aside per se. And then third, and I would argue probably most importantly in a government, is it offers a little bit of a cushion. So if a funding gap happens, if a global pandemic happens, you've got something where you can sustain yourself for a little bit of time. What that amount of time is really depends on each government, which is going to kind of flow into my next couple slides, but it really depends on each government. So the categories in that fund balance number are listed here. I'm not going to go into the details of these, but just know that there are different categories. When you're trying to figure out what's left or kind of how do I analyze if our number is good, you're going to go to the unassigned number. That really is the number that is left. Once you take out all of the other items that, hey, people have given us money for a certain purpose that we need to leave, we haven't spent, or we have this money set aside for a project, at the end of the day, the remainder is called unassigned. So here is the graph. This is for the last 10 years. You can see the numbers in that unassigned number. So the top portion is general fund, and then below it is all the other governmental funds. So the number we've been looking at is this 9.5. So you've got about 9.3 million in that unassigned number for the general fund. And you can kind of see the ebb and flow a little bit over the last 10 years here in this graph as well. Now, when it comes to that number, the next question that I get asked is, okay, well, what are we supposed to have? What do you think we should have? Again, there's not a right answer for that. The guidance that we have found, GFOA, is a nationwide Government Finance Officers Association. They recommend no less than 2 months, so about 16%. That for the current year, for the target for the county would be about 2.4 million. So you're at about 9.5. I will caveat this with saying GFOA's recommendation is for governments. It is not for counties in Montana. It is not for a small school district. It is not for a city. It is not. So think every single government across the country. This is kind of their overarching recommendation, which it does not necessarily apply to every government the same. So when you're thinking about the county, that unrestricted number, that unassigned number, about 9.5 million, that's about approximately 7 months of expenditures. So if you think, hey, as of June 30th, we don't get any more dollars in the door, we could sustain ourselves for about 7 months if the expenditures were consistent with what they were last year. It's good to have a handle on that. The county can adopt a policy to say, hey, this is really what we're striving for. We want to be between this percent and this percent, or we want to reach this percent, or whatever that looks like. There is a GASB 54 is a standard that said, hey, you can have this policy and have it in accordance with that. That's a conversation you could have, but either way, it's just good to kind of have a thumb on where that fund balance number is, because that's really when you're thinking about projections and future activities, it's good to know what you have on hand compared to where you're going.
Hey, Jamie.
Yeah, absolutely.
Just to add on that, I know that GFOA has the 16.76% as a recommendation. We, as a county, our policy is 25%, specifically with any fund that is receiving mill levy. property property tax revenue, because we only receive property tax revenue in twice a year. And so we need to make sure that we have enough money at the end of the fiscal year to be able to get to that November property tax revenue when it comes in. We're also not allowed for those funds to go to budget over 33% in those fund balances. So there's quite a bit of control from a compliance standpoint from the state of Montana, and it's really dictated by the property tax revenue that we heavily rely on here. So it's a 25 minimum and a 33 max for any funds that receives revenue from a property tax.
Sure. There you go. Perfect.
And our property tax revenue for this last is going to be approximately 30, 35, something like
for in total, property tax is getting closer to 40 million in the overall property tax.
All right. Ready to move on? Okay, perfect. So next we're going to talk a little bit about business type activities for the county. So when we're looking at business type activities, this is the fairgrounds, the county landfill, and then some other non-major funds that kind of get lumped together in the report. The reason these are called business type activities is kind of indicative in the name. They are operating like a business. So the intention with these funds is to cover their costs. And then in a lot of cases, I have governments who use these funds to kind of supplement the operations of the county in other areas, whether it be to keep property taxes down or something like that. So fairgrounds and county landfill, you can see their change in net position. Fairgrounds was a deficit of about 313,000, and then the county landfill was a positive 384,000. So got down to that net position at the end of the year of about 7.3 for the fairgrounds and about 8 million for that county landfill. And you can see the operating revenues, expenses, and then some other non-operating items in there as well. And then when it comes to kind of the other operations of the county, there's a couple areas that are pretty significant. So I just wanted to touch on them quickly. So capital assets and long-term debt is really the first area. So capital assets are things like land, buildings, if you've got vehicles, that kind of thing. The other thing that's in here is what's called leases or subscription-based IT assets. That is, I like to call leases for subscriptions. So think like Teams license. There's some considerations on if those are long-term, do they need to be added to a fixed asset schedule? So this is really where the county is at for their governmental activities. So this is kind of the general operations, not the landfill and that. So you can see you're at about $61.7 million of net capital assets for the end of the year. That is taking all of the assets less any of the accumulated amortization or depreciation related to those. So that really is, hey, if you've got a building worth $1 million, you're going to depreciate it over 30 years. That $1 million is going to be in the top line. And then as it depreciates over the 30 years, that's going to be a reduction there in terms of that depreciation piece. And then the last piece is this debt piece. So for both the governmental and the business type activities, there's a little bit of debt there. Governmental activities really is the kind of the general debt of the county. So general obligation bonds, special assessment debt, leases, that compensated absence number that I was talking about. So really about $14 million in the general, kind of the governmental activities of the county for debt. And not all of that, like compensated absences, that one is an estimate. So that one says due within 1 year is about 1.4 million. That's an estimate. That's not necessarily exactly right. Those other numbers are going to be what the payments are, but that compensated absence number really is an estimate. And that usually is a portion of that paid out as termination benefits. And then also a portion of it is, hey, what is going to be used throughout the year for those things like vacation. And then for business type activities, that has some compensated absences in there too. And then the big thing in business type is landfill closure and post-closure costs. So at some point, there is going to be a liability that needs to be paid for a landfill. When you close it up, you have maintenance, you have things that have to happen after that gets closed. That is, again, another big estimate number because you use the best information you have at the time to be able to determine what that is. So about a total of about $1.3 million for those business type activities of long-term liabilities out there between those two items. There isn't kind of those general obligation debt. There's not some of those types of items in that business type activity piece. And with that, that is all of the prepared information I have. Do you have any questions for me through the audit process or anything we chatted about?
No questions from here. I just wanted to apologize to the commissioners. We had received this slide deck the other day and I should have printed them off. I didn't realize I missed that, but I can print them off and give you guys copies after this. You only have one copy. Sure. I'd like that. All right.
Excellent. So the last piece of content I have is just a big thank you. I know that everyone at the county has a full-time job. You have plenty to do. We come in as auditors and really shake things up, and we ask a lot of questions. Sometimes we ask them different ways. We ask them multiple times, especially if there's different things. So we just want to say thank you to the county. As you get the slide deck, my contact information is on the back. If you sit down and you read that 300-page ACFR and you've got questions you'd like to talk through, please feel free to reach out to me. I was aiming to be there in person today, but flight costs got a little bit out of hand once we determined the date. So I look forward to coming on site at some point. I am in sunny Minnesota. So I'm looking at a cornfield right now. It's much different scenery that I'm sure you have out your window, but I look forward to meeting you all at some point in the next, hopefully, year if those flight costs come back down. But we really appreciate collaborating with the county, and we're here to support in whatever way we can.
Thank you.
If you don't mind, I'd just like to reach out and thank our accounting teams, thank Frank for helping too with that. But Jen was a very key part of this audit, making sure that the auditors had everything, and Jessica and I know Jen were working a lot of days and nights, and I don't know if you guys spent weekends too. I know Jen did, but I know there was a lot there that had gone into it, and from our grants department put a lot into helping us with grant items. And then also I wanted to just thank our finance people and all our department heads that we have, because without those members being a team for the county, we wouldn't have the accurate statements that we do have, and it takes a village. So just wanted to thank everybody on that, make sure that everyone is noted. And again, our accounting team downstairs, not just Jen and Jessica, but the other both too. Sarah works on the federal grants. So it's a team effort, and without them checking our daily balances on the bank and making sure that everything is recorded properly, we would definitely have some findings, or worse findings. Thank you.
Yes. I can add, Amy, I echo everything you said. Thank you for everybody that's put in all the effort for these statements. Also, just remind everybody there was a ERP, or a new finance system, that was implemented during this whole process. So that was an added burden on staff, and we were able to get it done. And also, this coming year means that there's a good thing with this new system. So you don't have to live in two systems anymore, but you have to learn the new system when it comes to providing all the documentation and everything, closing out the books and everything for next year. So it's a new thing that we'll be going through this fiscal year end. But the nice thing is we're only living in one world instead of two. So a little bit more runway, but still a learning curve we're up against.
Yes. Question for you, if I might.
Yeah, absolutely.
You do a lot of other counties and maybe our size around the country, I assume.
Mm-hmm.
And comparatively, are we reasonable, and are we better, worse than what you see other places?
It is That is a very it depends answer. Every state has different taxing policies. I work with counties, school districts, cities, special districts, kind of all over the board. And throughout the country, we're dealing with a lot of, taxing. I don't want to say issues, but challenges. There's a lot of taxation changes coming down the pike. So, uh, what could look really good today could change significantly tomorrow. So there's not really a good answer for that. I would say that fund balance number is definitely what you want to look at, and it sounds like you're right in line with your policy and in going from there. But yeah, I'm going to give you the it depends answer because it is all over the board in terms of, I mean, you don't have a finding saying you have a going concern, so that's a good thing. We didn't say we don't know if you'll make it to next year. But in terms of kind of where you're ranking, quote unquote, with others, it's so hard to tell. I have a really big school district that they have operated very well, and then the state needed to change a calculation in a funding source, and now they have a $50 million deficit that they need to pay back. So uh, things are very interesting right now, especially in terms of, when you're relying on others for some of that funding, it really just gets challenging. So that's a challenging question to answer.
As you are dealing with uh, looking ahead somewhat, we've been hearing a lot about changes in federal funding for things. Do you feel that some of the people that you're dealing with are anticipating a reduction in federal funding for some of the things they're doing?
So nobody's operating under the impact or under the impression that federal funding is going to change. Everybody's operating under the assumption that things are going to be how they are until we know otherwise. Because the real big challenge is if you start trying to anticipate and you make changes based on anticipation, and then that changes, that makes it really challenging. We'll think back to a year ago when the federal funding kind of freeze and real big changes started kind of coming down. If you had made significant cuts or something at that point, that would have been a little bit preemptive. So until these changes really are put into play and we're seeing them, I don't have a lot of governments that are operating under the impact of, hey, we're going to go ahead and make these changes before they are set in stone. A lot of the federal funding kind of guidance that's come down is a lot of either pauses or delays in funding that have come up. So that's why it's important to have that fund balance there saying, hey, if we do miss I had school districts that were missing food payment, so they weren't getting paid for the lunches they were serving timely. So they needed to be able to stopgap that. So you need to be able to kind of float yourself a little bit if some of that funding pauses. But for the most part, we haven't seen a significant reduction because what's happening is some of these funding sources, number one, most of them were already set into motion. So there wasn't a lot that could be done in terms of like pulling them back. But some of the changes that have happened is it's just kind of being repackaged into more of a block grant type thing rather than a direct funding. But a lot of those changes are still kind of on the horizon and they haven't taken shape yet.
Okay. All right. And one final question, we feel really confident about the folks we have working for us. What do you see other places where we could be more supportive of our financial staff to
It
make
is
sure they have the tools to uh, provide us with this accurate information as possible?
Yeah, it's really challenging. There are so, like I was talking about the GASB standards, they are so complex. And as an auditor, I work on a different client every single week. So I'm doing a compensated absences calculation review every week. The county only does it once. You do it once a year. This was the very first time your group had done that. So I am seeing a lot of my governments using some advisory services to help because there are services out there in terms of, hey, we've got people that do this on a regular basis. I know Sherry Peets used to work for the county. She actually now works for us, but she's doing something like that where she says, I've got the experience at the county. I can help counties now do this from another side where I, as an auditor, need to be independent, arm's length. When we come in as a consultant, we can be a little bit more sitting at the table with you and helping through some of that stuff. And I am seeing a lot more of my governments utilizing that in terms of two things. Number one, these requirements are getting very, very complex and detailed. And so let's use an expert that knows that's what they do every single day. And two, our staff are tapped. There is so much to do. There is, in a lot of cases, more coming down with leaves and paperwork and HR requirements. So they've got a ton on their plate. Let's get them some extra support to help them so that they have the capacity to get their day-to-day done. So we're not missing things like a payable or a payroll, and also being able to get this stuff done. So I am seeing a lot of my governments utilizing some of that assistance, and that's helpful. But the standards are they're challenging. They're getting more challenging every day, and it's not like they say, okay, we're going to add this one, so we're going to go back and remove a different one. You still have to do everything for all of the ones that have been put in place before, as well as the new ones. There are some states that are talking about changing up their requirements in terms of maybe they're not going to require full accrual statements, or maybe they're not going to require you to file whatever form. I don't see that in Montana, but across the country there are talks about that. So that is a topic that's out there. So if your finance staff is in conversations across the country with people, they may hear about that. And really, the way those changes start is by conversations that happen throughout different governments, and just talking to kind of local representation and saying, hey, we've got challenges in getting this filed or getting that calculated, and really understanding it.
Thank you.
Yeah, absolutely.
Anybody have any other questions? All right. Is there, I guess we need to ask for public comment. Is there any public comment? Is there any public comment? Jen, were you trying to get some?
No, I was just gonna say thank you for letting me join today, and I appreciated working with this group and the county, and wish you guys the best. I know your new ERP system was money well spent, and now that it's implemented, as Frank said, it's gonna make the processes a lot better and smoother. So.
Thank you. Any other public comment? Seeing none, we're adjourned.
Yes.
Thanks all. Have a great day.
Thank you. You too.
Thank you, guys.
Excellent.
All the
This